You're with us on Trading Hour. The market's retaining some of that green, and it's time to get a conversation going on the fundamentals now. Mrinal Singh, CEO and CIO at InCred AMC, is with us to give us some fundamental cues into the market action. Mrinal, thanks very much for joining in, and I'm sure you've already guessed my first question. It is banks, which seems to be the latest worry or point of debate for the market, looking at what's been going on over the past couple of sessions. Just your thoughts. I mean, now having seen the numbers, HDFC Bank, IndusInd, Kotak, ICICI, what's the verdict? Are we looking at a problem here in the sector, or do you think the market is just, getting too nervous for perhaps little reason?
Well, thanks for having me here, but very, very pertinent question. The banks, we've seen quite a few results pass by in the last 2-3 days. So one thing that is very clear is that the names are under pressure. And there has been more or less, problem around accrual of deposits. So that does mean that there is going to be a reset of what banks are going to deliver going ahead. I think there has been the valuations also have got reset in some cases, and some are on the way. But banks are an integral part of the economy and the growth ahead. And there is no doubt that as the economy grows, we would see banks participate in a significant way, be it the corporate-led growth or be it the consumer-led growth. So they are there in both segments of the economy which matter. So,
sorry. So, given what you say, just want to, get perspective from your standpoint at InCred. Right now, would financials, large banks, would this be sort of, your top weight, top two, top three? And how would you look at positioning? Because the thing is, investors have been patient for a very long period, and there's been sustained underperformance throughout the last 1 year, and now we run into this rough weather. So therefore, what would be the advice from a tactical standpoint?
At our end, we walked into this result season with very huge underweight on banks, and we're looking to actually correct that as prices get interesting. We will obviously be very selective into high-quality franchises where we think the long-term trajectory is intact. So we did walk in with a very, very huge underweight on lenders into the earnings season. But as we see ourselves, we would walk out of it with our underweights getting significantly reduced.
Well, that's quite incredible. You must be one of those lone, investors or, houses which was underweight going into banks. Everyone we spoke to was so bullish on banks going into the earnings, and it's the best bet, for 2024. So now are you neutral, or you're still in the process of adding to banks?
We are in the process of going neutral. Clearly, we have narrowed down on the names that we want to build upon, and the weak prices are clearly offering that opportunity to us.
So would you stay neutral as of now, or would you look to, double upgrade it to an overweight?
So, well, for the time being, neutral is fine. We would like to have more clarity on how things are going before we decide to move it up.
Okay, so that's banking. Mrinal, what else? How else are you positioned on the market? And, when you get days like yesterday or, sometime last week, when we get these little mini shakeouts, what else are you looking to buy?
So, interestingly, our portfolios are geared towards largely brick-and-mortar businesses. We're quite upbeat about things that are going to benefit out of capex recovery. We also believe that, in the next 18 months, we will start seeing rural recovery, and rural demand could be a significant driver of economic activity. Last 3 years have been quite weak for rural. But as we look at the data, high-frequency data, very clearly the rural has bottomed out. Although the growth is still tepid, but then it's a good sign that there is no more decline. Decline has more or less gotten arrested. We've generally observed that in an election year, rural consumption does pick up. Rural economy does need some kind of stimulus. Election spending could be one of them. In any case, India growth story is about larger households and penetration into lower income households, where rural plays a very important, significant part. And that will also reflect upon demand at some shape because of the volumes that segment offers is very large. And we should see capex getting driven. The government capex is a significant driver of activity for almost last 10 years. The PLI and other initiatives should result into, we are already seeing some bit of that in bits and pieces, but we should see going ahead post the election when the new government in place, we would see corporate India stepping up the pedal on the capex side.
Okay, all right. Interesting chat. Would have loved to go on, but a little short on time today, so rural recovery. I think next time we'll pick it up from there and ask you how would you want to play that recovery. So looking forward to the next time that we have you on the show. Thank you for joining in today.
Thank you.
Okay, let's take a quick break on that note. More on the markets in just a bit.